Matt, by the way, before we do that, how do we pronounce your last name correctly? And what's the origin of the name?
So it's pronounced Sutika. The
Sutika.
origin is
Okay.
Czechoslovakian, or as mentioned previously, it could be part of this Phil Collins song called, Sue, Sue, Sutika. It came from one of the two. Depends whether my dad's telling the story or the truth was coming out, I guess.
I'm sure that if your dad tells the story, it's the Phil Collins song.
Absolutely, absolutely, absolutely.
Yeah, I can see
I
myself
think
doing
I
that.
think it goes right when he said that before he married my mom that he almost got to marry Heidi Klum. I think it goes in that same that same story. I think it was, if I remember back to being a little kid, I think those were the same stories. Heidi Klum, Phil Collins song, it's like the mom from what's it, the Tom Hanks movie.
Big? No.
No, what's it? Gosh, I can't believe Tom Hanks. The where he goes through all the years. Forrest Gump. Wow, that was
Oh,
bad.
oh, oh.
Where the mom had all the stories, for him of like who the dad was or whatever, and it was like a celebrity. I think it's Forrest Gump type stories.
Who? By the way, who was it? Wasn't it? No. She slept with the principal so he can get to school, but okay, doesn't
Yep.
matter. Different story. Okay,
Yep.
back to insurance and InsurTech. And okay, so Matt, how did you get to insurance? What's your background story?
Insurance. I was born into it. As keeping on the story with my dad. My dad was a 40-year State Farm agent, so I grew up in a very blue collar kind of area. We were right outside of like Metro Detroit, so almost every other parent either worked on a farm or part of a farm, or they worked for like GM or Ford. My dad was one of the few like white collar, individuals in our town, and he ran a State Farm office, and so that's kind of how I got into it. Working in or out his office, and through college, just kind of took that path, and out of college opened up a State Farm in Indianapolis. So dove in. A lot of it was I saw my dad's lifestyle as an entrepreneur,
Hmm.
and where he worked hard. He had a great business. He had lots of great clients, but also what I valued was he never missed a soccer game. He sponsored a lot of things. He was very valued in our town. All these items that I wanted. And since I already knew insurance and that worked out good for my dad, and he went on a lot of Disney vacations and everything, I was like, that's what I'll do. So that's really how I started my journey, was with the State Farm. And, through that, I kind of discovered that I had a love for being an entrepreneur within the insurance space. The captive world wasn't particularly going to be my bread and butter for the next 30, 40 years, just due to, I always say that I, I outgrew them and not the other way around. Like, nothing against, State Farm, but I wanted to control the technology. I wanted to control having, different options. I wanted to be a real business, entrepreneur in the space. So, um, just like LeBron took the talents elsewhere and ended up in Chicago. Yeah, I know. Sorry, corny, but went to Chicago and started a brokerage called Skylight
Hmm.
Insurance, and that was built around the premise of kind of what I'll get to of where we're at today with my current company of taking a partner, right, and creating a better way to do insurance and then combining them, right? Have good partners who need insurance, find a better way to get the insurance to them, and make money or have a business around that. So Skylight was built around a real estate company called Century 21,
Hmm.
which does a bunch of home purchases across the country, finding a way to use technology and insurance to give their agents and clients fast, easy homeowners insurance at their closings. And then fast forward, that company got acquired by and merged into where I'm at now, which is Obie, which is an InsurTech in the rental space. For those who are familiar with Hippo, Lemonade, Openly, all those type companies, we're in kind of a similar space, but we concentrate on the rental dwelling or the 1 to 4 unit rental for the landlord. So
Mhm.
that's my short version of the journey, or for some of those people listening, that might have been a long version, but that's my journey with insurance.
Okay, so you mentioned a couple of things that we are going to dive into them now. So currently, what do you do for Obie? Is that you?
So my title is Chief Insurance Officer, but the easiest way to describe it is I'm over on our sales and distribution end. So I'm anything to do with sales internally, our external go to independent agent broker strategy, our DTC, which is direct to channel partner, controlling those sales with those partners. And then the operation side of that, as far as like what most people in the industry would call like the service side, or the claims underwriting, billing, renewals area as well. So over kind of those departments for the company.
Okay, so let's talk about Obie, and I will save the "May the Force be with you" and other uh, Star Wars jokes for a while.
Yeah.
I'll do my best. You already hinted a little bit that the main product is for dwelling insurance. What is OB? How and you say this is where too many thoughts coming together. I need to cut myself out. So, can you tell a little bit more into a little bit more depth about OB, the dwelling insurance that you sell, and how do you do that?
Yeah, absolutely. So, with my background in the previous company, I got to be around and consult and help and be involved with a lot of these, what I call the InsurTech 1.0s, right? The,
Mhm.
HIPAA, Lemonade, Clear Cover, things like that. And what Obie does is we have a 50 state instant 1 to 4 unit rental dwelling product where you can go on the website, and within minutes you can, what's a DIY or whatever your own, rental dwelling policy, right? You can put your information in, get a quote, you can bind it, and, very similar to, your experience you would have through an Amazon or any other, direct to consumer type products. So we have that as our core. Our
Mhm.
second piece of that is we are doing embedded insurance for a lot of the prop techs out there, right? That want to, within their platform, have people come into their site, what's called a roof stock or a nest egg, or Fundrise, or any of these like prop techs where they have a client coming in that owns an asset, and they want to be able to provide an insurance quote and an insurance bind. So, we're building embedded. So those are kind of our two main bread and butter things that we concentrate on. Uh, the reason why, I brought up the first part is we went into the rental space because we, not only believed in the whole InsurTech model of, bringing things, faster, quicker, and with better overall, like, let's call it journey for the customer to get to their insurance policy. But we also liked the rental space because we felt it had the least competition and the least amount of other carriers, whether that's the legacy markets or just in general, really in that space, right?
Mhm.
Most of the other insurtechs and most of the other carriers coming into space, they're just constantly hitting home and auto, home and auto, home and auto. We wanted to go into a space that was a little less crowded. Also, with my background with Century 21 and our two other founders of Obie, we really liked the real estate market. So that was the other piece of it. So that's kind of what Obie is doing, and kind of the why behind why we went into that vertical.
So is OB an MGA? Are you a broker, full carrier? I understand that you're licensed in 50 states, but once you're mentioning the ability to underwrite and bind online, you need to have that core system in place and basically to be, um, I forgot the word for that, authority,
Yep. Yeah. No,
binding authority. And you
yep.
need to be
Yep.
a
So you're
binding
spot on.
authority.
Yeah, so the easiest way to describe us is Costco. Since we took over my brokerage called Skylight, we did start just like Costco did, selling other people's products, doing it in a better distribution model and a better, faster way for people to come in. To keep it on that analogy, and to purchase, their goods, right? So we have that as our core, where we're 50 states. We have connected with carriers from the space that we can write product. With that being said, we have transitioned over the last year or so into opening up state by state into our own MGA product, which is our own internal policy. We're backed by Munich for those particular states, and we're rolling out about, seems like a couple states every month, with the hope to be in 25 to 30 states here in the next year or so with our MGA. So very much, just like Costco had its Kirkland brand,
Mm-hmm.
or anything else. You look at Amazon, and then Amazon having their own products is, you kind of build that model, start to figure out how you're going to bring business in, distribution models, all these different things like that. And then slowly we've been building our own Kirkland brand, within the atmosphere. So that's really probably the easiest way for your audience to understand like how we've been building Obie is most people know Costco, and that example should resonate pretty good.
Actually, yeah, I usually use that example, not Costco itself, but the distribution, how the distribution channel. Now, given the fact that the audience for this podcast, who, if they are watching it on YouTube or LinkedIn or just listening to the audio, and it's an educated audience that is already tuned to our space, which is InsurTech, if they are founders or investors, carriers, or other insurance professionals and people who live in this beautiful ecosystem. And I think that they heard me using more than once the analogy of the distribution, how it works that, oh, there is Coca-Cola, there is Pepsi. In order to give the cans, this is how they work. You have the distribution, you have the mom and pop shop, the grocery, the bodega, or you have a supermarket. And what's the role of the wholesaler? What's the role of the retailer? Each one, and why you should put the cans here or the six pack, the big bottles over there. And I love the, when you add Costco and the white label and how slowly, for example, Costco with Kirkland, turning their Kirkland brand to a known brand and doing the small modification. In their case, it, whatever is their their unit of economics and differentiation with the product itself on top of the Kirkland brand. For you, it's better understanding the underwriting, better understanding and executing on what does it mean to sell the next policy, or God forbid, it's the claim or handling the claim. No, it's a great analogy. I love it, and I'm going to use the Costco part as well as an extension. Yeah, thanks. That's great. Yeah.
There you go.
To approach the niche market of renters, which is not as small, especially with dwelling. Now, I'm not really sure
Yep.
that people understand the difference between, and let's call it insurance 101 to people who didn't pass the exam or got an agent license. What's the difference between dwelling, which is 1 to 4 units, right? And and what we think when we hear lemonade, it's like, okay, renter insurance, but what is dwelling? We hear hippo, it's homeowners insurance, but what is dwelling? Can
Yeah,
you
absolutely.
give us that
Yeah, I
small
can.
insurance 101?
Yeah, absolutely. So, hopefully I can make it very simple, because that's always what I try to do when you explain insurance. Because if you don't, insurance will just, go over people's heads, or make them go to sleep. So, given the example, let's just say me, Matt, I own a house
Mm-hmm.
in California, and I'm living in it. I own it. I'm on the mortgage. It's all mine, right? I'm going to need a homeowner's product, right? That's the term that you would get. That's the insurance that I would need, because I'm personally live in a personally owned house, right? A couple weeks later, I decide I don't want to live in that house anymore, and I move over to Florida. But I'm going to keep that house, and I'm going to rent it to this guy named Mike, right? Mike moves into that house, right? At that point, I am now a landlord, right, for that house. I am no longer personally living in that house, but I do own it, and I have a renter in there now named Mike, and I need a landlord policy, right? That's where Obie comes in place, because I'm still responsible if a fire happens or tornado comes through or earthquake or whatever happens, I still am financially responsible for that house and the structure of it. And if anything happens, and I want to ensure that. Now, the last piece, the lemonade piece, as you mentioned, now Mike's going to probably, like normal renters, he's going to bring in his couch and his clothes and his belongings and his toothbrush and all those type of things that me, Matt, I don't own that stuff. Those are Mike's.
Mm-hmm.
So I would not
Yep.
insure and take that. Therefore, Mike's going to get what's called a renter's policy because he is a renter and he needs some personal property coverage, and that's what renters is going to do. And then he also needs a little bit of liability in case he's liable for anything that might happen while he's staying there, or he's the one that causes the fire, right? Because he left the pizza on the stove too long or whatever the case was. That's a bad one.
Yeah, no.
But you
A
get the point. But yeah,
romantic,
that's kind of the breakdown.
yeah. So basically, it's the difference between an owner that is occupying the space to an owner that rents it out. And then, of course, we have the renter insurance that it's only the property and the liability in terms of third parties getting hit and get injured. So how did you recognize that that's the niche, that the dwelling, the non-occupied by owner, that's a great. Are there so many apartments that today are being used by renters? What's the size of that market?
Yeah, so I wouldn't be the one out of me and my partners to talk like numbers, right? That it's like
Okay.
type of thing. To be honest with you, right? Like
Yeah.
if I had Ryan, our CEO, on, he would give you what I can tell you from a strategic standpoint of why we chose the rental market was trends. Like that's what I found, right? Airbnb's a trend. The trend in general is people are renting more. They're wanting to, this whole HGTV, DIY, like own rentals, fix and flips. The rental space is just getting bigger and bigger from a standpoint of, you know, not only can individuals get, I think, access to it more, where it used
Mm-hmm.
to be maybe a little harder barrier to entry, but now you have all these like prop tech companies, right, and real estate tech companies that are even allowing people to get into the rental space in a better way. Like there's these real estate companies out there that will basically find the house, tell you exactly how to fix and flip it, and all you need to do is sign up to be the person on the note, right, to do it, and you get your profit from it. But they already have the contractors lined up, or what, there's all these different things, or they'll help you with the property management, or they'll go. So that was really the trend that I was seeing, that was happening across the United States, that this was going to be just bigger and bigger and bigger, right? Like more apartments are getting built out, more rentals are getting built out, especially in like going towards like the southeast and everything like that, especially people moving and trying to get into warmer clients or less taxes or whatever the situation was. And then overall, I just found it still as a market that we could provide value, right? The home and auto space is really tough space, right? There's not as much value as there is price shopping, right? The little Gecko and Flow, they just did a total number on that industry, right? As far as, I mean, they really did change it. It went from like, they just basically said value and just crushed it, and just said it's all about 10 minutes and 15%, or 15 minutes and 10%, whatever they're, for which way, if it's the 15 or the 10 or the 10 or the 15. But
It doesn't matter.
they just,
Yeah,
yeah.
it's brilliant.
And
It's mm-hmm.
yeah. And so to me, I saw that as a lot of, I get $1 million in new premium, but I lose $1 million to this person. And it's just a lot of Rob, Peter, and Pay and Paul over there in the home and auto space, that I just no longer wanted to be into that area. Right. And so the rental space, I found that, we could really dive into and hit insurance the way that I've always believed insurance works, is customers come to you the way they'll leave you. Right. And in the rental space, you could still provide value to clients, because people in the rental space are still looking for partners. They're still looking for advice. They're still looking for that professional experience, because they might have a schedule of properties, or they might just have one, but they're looking at it as like a business opportunity. And it's not just like, a stay at home dad or stay at home mom who's just trying to save $10, and they're going to shop on Google real quick and then leave you again a month. So I felt that the customers would be stickier in this space. And then I also, in that same premise, knew that all these prop techs and real estate tech companies were coming out, and they were going to already be building out huge, gigantic customer bases that, we could just be part of their journey, right? If they're finding customers who believe in, property management in a tech way, or using tech to find their real estate properties, or they're willing to go into a portal to put their properties, or, all these different things, they're probably interested in a tech version of the insurance, or a faster way to get insurance too, right? And so I knew that we could really embed and be part of a lot of, these, large prop techs. And then eventually, I think that's where the lending market will go to, right? The lenders in the space are going to want a fast, easy solution to provide insurance for closings. So that's really, stop there. That's kind of the main reason we got into the space, is just, we liked the opportunity not only to be able to grow the business, but also keep the business and run it like, I know InsurTech doesn't usually like to use this word, but like potentially a profitable business, right? So
No, 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 no,
I don't
no,
know if
no.
I'm allowed to say that or not. Yeah. Okay.
Which part? We love no. We profitability is amazing. The only people that don't like to listen about profitability are the different investors slash founders on the Silicon Valley
Yep.
space, where it's all about speculation, which completely makes sense
Yep.
when you take that type of psychology into place. But it's different way of how to handle things and to
Yep.
set expectations, especially valuation. About, you can speculate, it's much easier, but once money comes in, okay, it's the the Schrödinger cat. Is it alive? Is it not alive? Right? Is it
Yep.
alive or dead?
Absolutely.
And
Absolutely.
when it comes to insurance, and we try to merge InsurTech, the startups world, into it, well, let's say this way. That's why we've seen the InsurTechs that went public. Well, one of the reasons that we've seen
Yep.
the InsurTech startup that went public crashed by 80 to 90% on value, because the public went like, yeah, no, this is not how you value an insurance company. You're an insurance company. You're not a tech company.
Yep.
It's a reality check, right? So
Absolutely.
it's there. Of course, there are so many caveats on that. It's
Yeah.
way
Absolutely.
more complicated. It's not just like, oh yeah, you have no idea what you're talking. A lot of very, very smart people dealt with that problem. So it's not like, they have no idea what they're talking. They know very well what happened. I would love to hear from your experience about the exit or the merger experience that you had with Skyline and Obie. Many
Yeah.
startups that go through that or hope that that will be one of their exit strategy. How was the experience, and do you have any tips of how to manage a merger with another company?
Yeah. So my experience overall, very positive. Strictly, I will tell you, it came down to Aaron and Ryan, who are the founders of Obie, and my business partners. Um, I think their willingness to really, make sure that we, delivered on, everything that we talked about. Um, you know, Once the lawyers get involved, right? That's always, if anybody's gone through a merger or an acquisition, or even like a gentleman's agreement, right? Like, you have these ideas, you talk about through things like, oh, we're going to do this, we're going to do that. And then all of a sudden you start putting it together, and sometimes it feels like everything's changed. And I think that was the one thing that I valued, was that, you know, I not only, was that process, really well done by on their end, is, you're also, what people forget too, is you're going through this crazy negotiations and the merger, and then you're going to go work with that person, right?
Mm-hmm.
So it's like, you have to feel like both sides are winning, and you can't play this game of like, oh, I got away with something, because you're going to eventually like see that come to play, right? And then, you're working with that individual. So I think that, for me, what I valued most was like the honesty, the transparency, both sides really did think about the future. Like, hey, you're probably missing this, you're probably missing that, and that was really important. I know that doesn't always happen where you have that relationship. We were lucky that the three of us had been working together for about 2 years as companies
Mm-hmm.
prior to this, so we had built some good relationships, and we kind of already knew a little bit of how the other person worked and everything like that. um, I would say we did the merger in April of 2020. Do not do a merger in a pandemic. That part you might want to skip. Letting at that time the whole team know that they're like, we're going on this journey right at the time where a lot of people thought the world was going to end, or no one had it maybe wasn't the best timing, but it just kind of worked out that way. But overall, I think that what I will end with is anybody that has a chance to merge or get acquired, and it can be towards something that you're really passionate about, like I am about Obie in the rental space. I would say go for it. Because realistically, you only get so many potential chances to do it, and opportunities, and I think that there's a lot of benefits to it, especially if you're merging with purpose. So like that's my last thing is, you know, when we merged, we were strategic about like what brand would go for. Clearly, Obie made the most sense to go for. They were out of YC. They had the good name. They had the VC, behind it. It just fit well. We needed to bring experience. We needed to bring employees, which made sense to come over. On and on. We were very strategic. We wanted to have a base premium. We wanted to have licenses. We wanted to actually be insurance people that were starting this. So, that was the other thing different than most of the other InsurTechs, is that we had a lot of insurance knowledge and premium and other things like that at the start of it, which was kind of nice from a standpoint of, again, trying to be a profitable, well-ran company, and not just, let's spend $1 billion on Google and see what happens.
Well, $1 billion on Google. Well, I'm going to use your example from earlier. Geico, there were years that their marketing budget was between $1 billion to $2 billion, and it worked. They managed
Yep.
to burn that 15 minutes will save you, I don't know, 5 minutes or whatever sense of humor will save you a few bucks. And it works. That brand is one of the strongest brand out there. It's not a McDonald's or a Coca-Cola, but it's a very strong brand. You throw money you throw money at the problem solved or drowns.
I agree with you. And if you have someone that would love to invest in
Throw $1
Obie
billion at you
and put $1 billion in right now, I think we're looking at our Series B right now. I think we'd be very happy to entertain that phone call.
So, okay, let's talk about it a little bit more seriously. So you're raising funds. We are recording this at the beginning of September. You are raising a Series B.
Yeah. So Aaron and Ryan, that's the end of the business they handle. So they're currently right now, talking with individuals on whether we want to go forward with a Series B. So hopefully in the next 30 to 45 days, we'll know whether we're going to go forward, on that journey, or if we're going to, wait to the first of the year. But we're definitely in that position. We do have some flexibility because of the amount of premium and profits that we do have as a company, that we are able to kind of do a Series B when it's strategic, and not like where a lot of companies get into a position where it's like they got to do a Series B or Series C or Series A or whatever, because they need that cash, or they're going to run out because their burn is so high. We're in a good position, to, kind of, make sure it's the right timing. So again, Aaron and Ryan, and God bless them, because I know that the fundraising is quite the event.
as we are almost reaching the end of this episode and our conversation, of course, we can always continue later on a future date. Let's talk about future plans. So you started One Direction, you merged with Obie. Now everything is about Obie. And with the Obi-Wan Kenobi and other Star Wars jokes that I'm sure that you heard so many times, so you know, I'll skip those. What's the future for the company? What's the next step?
Yeah. Our next step right now is concentrating on our independent agent distribution. So we are, as of this recording in September here, we are just starting to launch what I call our wholesale area of our company, meaning that our actual like MGA product, we're going to start allowing agents across the country, starting in the states that we are in, to write our policies for their clients. And so that's really going to be a big end of year into next year, is really getting into the IA channel and the agent distribution. I've always believed that that's the method that you should go. From my letter to Daniel on LinkedIn at Lemonade years ago, saying that don't hate the agents too much. There's some value there, and then spending time with Lemonade and Hippo and openly a lot of these and helping them build out their producer portals. I've always said that there's independent agents here that are still wanting to sit at the kitchen table. There's was or is still a little bit of InsurTech thinking everything is DTC, but really there's agents that have 86% of the clients that just need to get to those clients faster and more efficiently, and with a better product. And really that's the hybrid middle ground that's going to be the most successful, is those agents getting the InsurTech carriers and their technology in their hands to deliver to clients they already have, right? And that's I think how the space will be won long term. And so that's what we're starting right at the beginning, is getting into that model. We feel that is going to be a key to our long term success, because I always use the analogy of Tom Sawyer, right? Tom Sawyer found the fence, and then he convinced others to paint it for him.
Mm-hmm.
I like I said, I grew up with State Farm. I've seen the model, right? Go out and get agents and have them paint the fence for you. It's the same thing at Obie. Like, we were wanting to have a kick butt policy, in the rental space, that we can get in independent agents' hands, along with our direct to channel partners, so that they can help their clients in the rental space.
Let's call it delegation and building an organization with the right incentives, so the producer and the producer of the producer will do a great job, and it will scale
Yeah.
up. Let me ask you the last question that I'm asking everyone. Can you give us a recommendation? It can be a book, it can be a movie, a life hack. And now that you are a new dad, well, 1 year, you've been a new dad for a year already. So anything that will keep you up, sharp, and I don't know, balance of life balance?
Yeah, my number one recommendation after being a dad is, if you're thinking about having kids, do it, because it's amazing. But from another standpoint, my recommendation always is about like working hard. And not from like the cliche standpoint, but I always will backdoor into the fact that for most people, they can outwork intelligence. Now, if you're in brain surgery, or you're flying rockets to space potentially, you might need to have a little book smart for it. But for the most part, in a lot of industries, that's my always advice, is just figure out what you want to do and work harder than anybody out there at doing that. And you can make up for a lot of other things by doing that. So that's been my advice since I was 22, because that's always been my method. Is I knew I'd never be even close to the smartest person in the room, but I knew I could work an hour earlier, an hour later, and and be a little bit more aggressive, and have success that way.
Love it. Matt, Thank you very, very much for your time today. It was a pleasure talking to you.
Hey, thanks for having me.